Greetings, market rebels and market watchers. Welcome to this week's macro measure and sector situation video combined. It is Friday, January 30th, 2026. It's about 3:23 p.m. here on the East Coast. I'm Wayne. Here's our trusty market rebellion disclaimer. Here is our trusty intellectual property rights notice. And then here is a flash of last week's slide. Not going to spend much time on this. Let's see. Yeah, big story, obviously, of the week. Probably again, metals, utter madness in the metals market, both up, now down. But we'll get on. We'll get on with it. I do want to quickly point out that we were having a hard time coming up with a lean. What most likely scenario, news neutral assumptions, what happens this week. And then as we worked our way, since I had to do a lot of it in real time, as we worked our way through, we kind of went with the if you're under extreme pressure and you need to make a determination which way do you go, and we had to slide over to the mildly bullish side because of the looming megas EPS releases. Right? So many of those super large cap stocks were about to release. They looked primed. They're big weights. So we went that way. That's really the only reminder from last week that I'm going to even spend any time on. And you can see this week's also threadbare. This week I'm going with Days of Drama and Discord because that's what I feel like we've had this week. It's just been there's a lot of stuff out there. I continue to say that. I continue to skip over it. Just voluminous. There's so many things happening between the domestic situation, which itself has much going on, probably more than most times I can remember. And some of it's concerning, and other parts of it are surreal. So there's just a lot happening there. Then you can add into that the international situation as well. So just a ton of stuff happening, and it all creates turbulence, right, at times and noise at times. And it's really tough when it gets a little crazy, right, to make sense out of everything and have high confidence for any real length of time because as I continue to reiterate, we just don't know when Trump is going to do something on Twitter. He's going to make an announcement. Someone in the administration is going to. Things that are just out of left field relative to how other past administrations have operated and so on and so forth. You may like it, you may not like it, but it's just got a really different feel, I think, from the typical action we've seen in the past out of administrations. So that's just a whole different can of worms right there. And then you've got this week or weekend with all this wild action, conflicting readings too, which is what we have here. And again, I'm calling it super spectacular drama, really interesting times. Play this video as fast as you can. We're going straight to the charts after this brief stuff. But basically, right, you've got the same thing happening all over again, where it's maybe slight tilt towards the negative side rather than the positive side. Again, people want predictions. I think that's great. I don't really think that helps you. I think having a general idea on what scenarios can probably play out or will likely play out, and then reacting to them and managing is really the life of a successful short-term trader, not making predictions and forecasts and stubbornly sticking with those. That's just my opinion. So I handle things according to my own views, and that's how I view things. For those of you that are newer and haven't heard me say such stuff before, but that's where I come from. Anyway, right, is there going to be an Iran action? Is it going to happen this weekend? There's rumors out there that that's the case. There are the big drama over the Fed. The head of the Fed is over after all of that pearl clutching and speculation. Which again, that was a lot like the Greenland thing to me, where I don't. I mean, it is what it is, right? It's just, is it really going to change the fortunes of of the market in the very short run, if because it would probably take someone that would be a shocking pick to do that. And people seem to have zeroed in on the Trump favored pick for a long time ago. Just like the whole, I don't know, Greenland. That to me, I don't think there was war brewing between EU countries and NATO countries in the United States, but the media and others pumped that whole thing. I think that was just a cover story that they used to create volatility and relief from it. You also have the possibility of domestic protests ratcheting up. I've come across some reports that say that's going to be happening in a big way this weekend. And who knows what can happen there because um, if you just have checked in on the Minneapolis situation, that's already got plenty of action associated with it. It's just, just one city. So who knows? Cuba, people are saying that there will be something. It may not be imminent, but that's going to continue, and then we're going to get many more countries that are going to, uh, I guess, in some people's view, find out. And there's stuff happening in Georgia that's related to the elections, that's related to these foreign operators, these international operators. And the US's case for that apparently is that they've been manipulating things. So that there's that story that's out there. There's just so many things. It's not even worth going on about them all. That's why I've got so on, but just it could go on and on and on. Anyway, the line that we talked about last week, which we'll show, we flirted with it most of the week. As a matter of fact, we're pennies away from it right now on the SPY chart. So we're left here, which we'll soon see, with I think a week of indecision, and it's just inconclusive. And that's really where we came out last week until we forced a lean, which we ended up going, bullish on. And fortunately, the early week action gave some opportunity for trading that way to traders that were willing to go with that early flow. The spiders to me look inconclusive, indecisive, but so do the other three. Maybe they're even a little bit worse or more concerning. So the action's been utterly bonkers. Breadth is not really looking great. You can't really flame it too much though, because it has been looking really good. So if there is a little bit of a pullback, it's not terrible. It's just that there is a little bit of a pullback. Metals, historic volatility, just an amazing move. I think SLV surpassed that long-standing target we had by a few bucks, and then it cratered. And part of that is just stretch, right? It just got super stretched, which is down here. The precious metals were taken down hard. Um, they were super stretched on a Bollinger Band basis, standard deviation basis. They're related. You could look at it different ways. The RSI measures on the monthly were in the mid 90s, which is just remarkable. You rarely see things like that in something that big. So then once things started to topple, and I think there was some actors that were sent out to do that. Once that started to really get rocked, it then forced selling and liquidations. I think there was force. I saw one report that said $4 billion of silver was, at least maybe I'm saying that wrong. Could be $4 million of the metals, but it may have been silver were forced to sell. That's how much had to be liquidated because of the volatility once it started to roll over. I can't confirm it. I'm just saying. Um, so I did get a question here, excuse me, about why were we not trading silver from the long side and gold from the long side, and we were just putting out updates on the UOA Pro service. We had silver and gold recently. They were in UOA Essential. So everyone that's in UOA Pro gets all those ideas as well. So we did trade it to the long side. I think it expired last week or the week before. I can't remember. But we had been trading it. It got utterly insane. So what we did was to lean into other lower dollar names and really just stocks in the space, miners, of course. And we played those, and they seemed to work out. So we went for things that were not as stretched, sensing right, just from experience and all the analysis that you could have a massive pullback at some point. It's just the way that things work when they go parabolic, and people that have been around for a long time are very accustomed to that. But that's exactly why you really only got updates for the last couple of weeks. We were not, we'd rather go into other areas. We did. And we did recently, when we were still in really until the last 2 weeks, we were still playing gold and silver from the upside. In fact, we had GDX on. I think that was still alive, but it should have maxed out. Like the spread we had was so deep in the money. You should have been able to close that for really nice profits, and paying attention to how overbought everything was. But we also have the whole USD situation. With the dollar got rocked. It's trying to bounce. There's been so-called Federvention where they're out there supposedly supporting the yen. That's what people are reporting. I can't confirm all this and to what extent. BTC crypto, it looks vulnerable. I don't know what happened to my. I had a little comment there. I guess I must have backed over it by mistake, but it said I think I had a concerning look, meaning we'll take one. So we'll take a look at that. And then I just feel the markets feel on I feel that the markets feel on edge to me, and we're not running away yet, right? With all these great things supposedly happening, great GDP being flashed here and there by the Federal Reserve, regional Federal Reserve banks, and the megas have reported, many of them have, and they did lead the market higher into that. But really, they're done, right? So they're not really going to help much that way. You do have, of course, I think there's maybe a few left, right? I know you have Nvidia. There could be maybe I want to say another one or two. I can't remember which ones they are. I know that Meta and Microsoft reported, and so did Apple. It might be, is it Google that has to report? I can't remember. It doesn't matter. The point I'm trying to make is that um, that could help a little bit, but that's still somewhat concerning. So again, if we just cut to the chase, I would just keep your DEFCON shields up. I think you gotta look at these charts now, and which is what we'll do. It's not really smooth sailing. It's not the look of something that's ready to go into smooth sailing mode. News could change that quickly, of course, but we'll see. Anyway, let's stop the share, reposition, and we'll get these out of our way. We don't really need these anymore. And I don't want to belabor this today, but I'm going to bring up my charts on screen three. Excuse me. And so please ignore the labels and the strategy labels as well. I don't know why they're not supposed to be showing. I don't know why Think or Swim is locked in with these things. I was just testing some things out, and they won't disappear. And I don't have time to tinker with this. But anyway, we're looking at Bitcoin right now, and you could see here's today's low. Look how similar that is to the low back in November. So technically speaking, right, this could be right. You have this leg lower. You have a consolidation, and now you're back possibly testing that. It looks like you're testing it. So far, they bounced it up pretty dramatically back up today, but this is concerning right now. You could certainly find support here and turn and burn, double bottom S type thing. But this is very close to that low is 81 210 today, and then you were at 87.50. So you're very, very close, right? So double bottom for sure, potentially, right, if it does reverse and go. But you can see the trends are pretty down, right? Obviously, you mainly have lower highs, lower lows in a bigger picture, sort of intermediate term way. In the short run, it's the same right here. It's a little bit messy, but that's what consolidations can look like. And you've got most of your SMAs tilted lower. So this is a risk on barometer, and you can see that the risk on barometer is really struggling, right? It's not that it's got to crash through, but I think there's pressure on it to hold here. If it doesn't hold here, then that really starts to sour the whole situation even more, could bring about more selling. People are saying, and I don't know this to be true, but people are saying, right, that it almost needs to come down a little bit further, and then that's going to, if it does get down here, really starts putting pressure on Sailor, and then he starts having to liquidate, others start having to liquidate. I don't know. I don't know the particulars. I'm just saying the way these charts look, it's concerning. So I'm sorry that's a little messy looking. I just brought that in for a little perspective. Let's see if well, we don't want that. We want this. I'm trying to get the right thing to show up. Where's my simple band? All my because I've been testing some concepts out. A lot of my charts are just really messy. So I have to do something about that. But I wanted to get this taken care of before I have expend what little energy I have left after this week. Anyway, you can see just how close that low is. And so this is a lot cleaner here. Not a good look. If we do maybe do a quick weekly look here, just because this is a barometer, right? You can see a little bit more. I mean, this does look like an area that you could come in and test near 75,000, right? So that looks like that, and that's really if that breaks, you're probably on your way, right, to another leg lower if you can't hold that. If it does get that low, that would be concerning. Let's go back though. I think the most interesting chart because is really what we talked about last week, where we spent our time on SPY. We've been using that as the proxy. I'm trying to make these videos a little less involved versus how they used to be. They used to be maybe like 2.5 hours between both videos that we now combine. But it's not my style. I don't like doing it this way, but that's what people prefer. So, but anyway, you can see the line that we haven't really done much with right there. That's that 689.70 line we've had up there for a while. And that line, I left it there, even though we were looking at it at one point for Fibonacci retracement. But that was what the former high was, so we put it there, and I just left it there instead of changing it out with a flat line. But the point of the whole line is this is a level that's really valid. So that 690 to round it off, that 690 level is really valid, and they are struggling and just really trying to hold this thing above there in a big way. And you could see how if I went intraday, you would see really how much action has been around this line this week. Here's a 5 minute to give you an idea just over the past few days. Right here, you are on Monday. This you come down, respect it, go through it, come back up to it, respect it, come back down, go right under it, respect it again, come back to it. You can see how many times it's trading above and below or near this line. So I'm sure there's been some gravitational mass there because of options. I would think there's been a lot of gamma around there, and so on and so forth. I probably should change it out, but I'm just going to let it sit there for now. I don't need all that time though. But if I want to argue this, unfortunately, I have to go back to the other view, unfortunately, to get us a few things to work with here. But the thing I'm thinking of in SPY is right after all we've been through this week, you closed at 689.23. Until a few minutes ago, you were really right near 690. So you were just pennies, not even a full point until I guess the last minute or a few minutes or two above this line. So they're trying like the Dickens to keep this above the 20-day in blue, above the 690 level. And that's very common. I mean, the people that do not think that levels are defended, and people, I mean, it's been happening since as long as I can remember, for me at least. I remember seeing individual traders impact levels themselves by trading way bigger than their accounts should have let them, to try to influence the technicals. I've seen that done, because they had a lot of contracts. They wanted to have that gamma kick in and thought they could be the spark or catalyst that would ignite that surge or sell off. So if that's one market maker, on one exchange, imagine, if it's real big money that wants to do that. But anyway, that's a whole nother subject. So yeah, I mean, you pretty much went up and you went down. So you make a new all-time high, the pattern repeats, new all-time high, almost instant fade, which we've been talking about. I can't even remember for how long at this point. So it's very much not encouraging, right? When you have this, the only good thing we could say is, right, which is what we have said time and time again, The trends are still up. The trends are not broken. It's holding above here, right? It's kind of like, well, where's the good finish? Where's the really strong stuff? Aren't these earnings good and all blah blah blah? And so I don't, I don't kind of ignore that because I'm really just going to focus on charts because again, I don't want to get too wrapped up into what I think about this, that, or the other thing because really the price action is what matters, and ultimately. But you would think, right, with all this so-called good stuff going on, wow, what's the problem? But there is a problem. Now, those are not there as catalysts aside from maybe Nvidia and Google. Now, Google, of course, could be a great catalyst if I'm right about Google having not reported and I actually am right for a change. So that's coming up because it's been so strong. It could, maybe that strength could be justified. Nvidia is way further out, but as I've said, many folks have heard me say this before. It's not like it's my original concept either. I'm sure other people look at it the same way, but I've just always noticed in really the last few years that if there is going to be a market sell-off, a lot of times they really don't allow that to happen until Nvidia is reported. They kind of keep things uh, chugging until Nvidia reports. I don't know if that'll be the case. It's been sort of a little bit of a, I'd say, pattern. But look, Nvidia, I thought they supposedly had good news and they were on their way, the way that it was sounding earlier. But look, that's basically gone nowhere and reversed. SMH. SMH, another new all-time high, instant pullback. Trans still looks great. Can't complain about that, but it doesn't have that. It's just been grinding its way up. It's perfect for covered call, aka smart covered calls, which would be long call diagonals. If you've been doing that, you probably love this nice grind, right, that you've gotten. But as far as trading goes, it just hasn't been trading as it once was. It's been a little bit more, uh, just more of a grind, not really a real jam, at times, which we've seen at times that just haven't had it. So there's nothing really terrible to say, right, when you're one day removed from an all-time high. I'm not going to trash it. It just, the readings just continue to not look that impressive in this. So in terms of your momentum developing. So I think that has to be a little concerning. You could maybe have a swoon in front of the NVIDIA uh, EPS. And then another kind of one, what was a leader, Avgo, Broadcom, this one also now underneath the 20 there. 20 is the blue line. So declining 20 and it's under there. It's threatening to crack the rust-colored 150 and only the 200 would be left down here in purple. Just a couple of your bigger names. And so they don't look jazzy to me, and so while we're on individual names, let's take a look at the mags so we cover those. Apple, we have we have Apple acting better, like we said, look like it might have a little try to look for a little double bottom in front of EPS last week. So let's count that as a bull. It didn't redo that. Okay. It looks like Thinkorswim's slowing down on me. Amazon, that's got earnings too. Maybe that's something important. We'll see. But that tried again. That put a slightly lower high in. So it's good that it tried to rally earlier in the week. It did help our little forced lean out early in the week, but that's it. There's really nothing much going on there that you would say, I love this chart to do this or that. It just sort of stuck. Google, another one that just didn't generate, which you can't really fault the stock. It's been great. It's just that it's kind of running out of steam of trading on its own momentum, right? It seems like it's wait mode now until you get to earnings. So that's not probably helping much yet, unless people decide they want to come in and start to really get jazzed up about what the earnings are going to be. Meta, as you might expect, after the patented jam job squeeze, there's a little bit of extra profit taking today in there too. So I think we had a lot of these call activity earlier in the week on these, and a lot of these were in UOA Essential. So there was some good run there. Hopefully, folks did fairly well, but it was a little bit muted on reaction in Microsoft. You could have maybe traded it on the way up, but if you left all your, this is why I always say, if you do catch the pre-EPS run, you want to play with so-called house's money if you really think you've connected dots and the stock's going to go higher. You can, if you've got money in your pocket that you can fund that with, it's a lot better than just showing up at game time a few moments before and buying high implied volatility or doing whatever to speculate on EPS. That's my argument. But clearly, right, this thing got smoked. We already talked about Nvidia, so we've got uh, Tesla. That's still sort of messy, tough to get a read on. They're doing a little bit of late day scampering like they often do here. So the gang's trying to work this thing away from, we were just really back at 690. They're trying to continue to work it away from 690 and SPY, and some of the other indices are index ETFs are catching a bid too. They're trying to put a better look on this as the last trading day of January. So goes January, so goes the year. Nothing's not surprising. JP Morgan, this is another big weight. That's I thought financials looked like they were trying to get it together. Maybe they still will. Maybe they need more time, but kind of hanging in there, not doing anything great. Netflix continues to knock it out of its own way. We had a Berkshire hit show up, put that one in. Got to get back above that 10-day there in white, the white SMA, and then that's our trigger. And then if it gets through there, it can start to power. I think in a neutral to positive market. So again, you always want that wind at your back. But there's some of your bigger names, right? Some of your really high cap, mega cap stocks, and just not really like, hey, they're ready to go. They're on the verge. So I'm making it. What I'm saying is, if you think about it, that could change. But if you take it at this snapshot in time, they don't look like they're really as a package ready to help you out and with all their weight that they carry with them. So then what? What happens next? Well, here's IWM, which was doing great. It had an awesome start. And naturally, right, it's having a little bit of a give back after that awesome start. And if you go back to the highest high before this, you came back to it. I think we said something about that, right? That you often will break out, break through, and then you come back and test your prior resistance to see if it can be converted to that former resistance to current support. So that may be happening right now as of really yesterday and today, depending on how you want to pinpoint that exact level. But that could be happening. So we'll have to keep an eye on that. That would be good. But you could see, right, they tried to rally that a little bit there in early to midweek, and then that failed and rolled over again. The diamonds, right? I'm jumping to those because I said we'd cover the other three. They're nothing special. They're actually down on the week here, mildly small. Right now, I do want to hasten to add that all the trends are still fine in all these things, but with all this stuff, all these EPS releases that maybe could have helped and under different a different scenario, they may have helped for sure. Right now, they just didn't help, and we're kind of like right back to where we started. So this has been really a wash of a week, and I'm not patting myself on the back. I am trying to just reiterate that when you have a really difficult time trying to come up with an opinion on what you think is going to happen, more than likely, most likely scenario, in the end, what happens here? And here's the late day goosing just continuing. Some things never change. But bottom line is that if you can't come up with that opinion, you you probably are right. There's probably a reason why you can't. It's probably just not that clear, and you're probably better off just again doing what we did, just saying, I don't know what's happening. If it starts to show me momentum, I'm going with it. I'm just going to keep it on a short leash. And if it keeps working, then great. That's you could almost do that every week. But there are times I think when you really can get prepped for more of a lean and have a lot more longs picked out than shorts, or vice versa. I think this week was more of a you go with the flow and on a breakout. We had things kind of outlined that way. But you can see that all three of the other indices are not really having a great week. The spiders themselves are not having a great week. We said if it breaks out and goes through this resistance line, which I'll highlight here, that we would then say, okay, let's go with it. And it did, for a few days. That's it. That's all we talked about. Now it's come back to that line. It's touched it now 2 days in a row. There's just so much support around here. So it's just, but you're just in a messy situation. The only good thing I can say, if you really want to look at the positive side of it, is now that we've pulled back really from that high, because you spent Wednesday pulling back, you spent Thursday pulling back bigger, and then they put the rescue together, the latest rescue. Then here you go today, and so this is supposedly indecisiveness, and it very well may be, but they did just goose everything away from the 690 level. So that looks like with 7 minutes left, it would probably take some big orders to really knock that down. That could have been market on close imbalances they were trying to grab liquidity in front of. I really don't know. Just late day shenanigans, regardless. But the point is that you could say, well, look, nice run into new all-time high, mild pullback, found support exactly where you would want, starts to go again, go with it. And I would say you're onto it. I mean, that's what I would do. On the flip side, you start seeing Friday's low has to, or today's low has to concern you because right away, right, if you start giving way there, you're so close to the 50. And the 50s where they might play shenanigans, they might do a flush like they did here, a flush like they did here. They're very good at dipping below widely followed uh, things like the 50, which is extremely widely followed, and then reversing course, right? That's their game on how they then get new sellers, new shorts essentially, and they get some people chased out of their longs that were nervous. They take that inventory and they start marking it up. That's what they use for inventory to start working things back up, and then getting when people want to buy, they've got fresh inventory for sale, so they can without having to go short. This is the as old as the hills. Everyone that's been around knows that. But I don't want to act as though I think this is a lock that happens. I'm certainly not saying that. Well, I'm just saying that that's obviously one scenario. The other scenario is that the 50 gets under pressure pretty quick earlier in the week. And it could be due to some of this potential news that's looming out there. So it is what it is. You've got things like the XLE moving up on related news, right? On all this stuff, as well as other factors. So that is doing its thing. We talked about finally, could this thing be breaking out after all this time of nothingness? And it's trying. It's finally, we talked about that a while ago. It's finally doing that. We've had paper in some names. We put some long side ideas in here, put a couple bears in as well because they showed up with some puts. Maybe there'd be a little pullback. We'll see. Remember, we're trading it in the short term, but this could be a big thing. This is breaking out. It would normally be a good sign, other than the fact that consumers finally started feeling a break at the pump recently, and now, right, this could be indicative of this going up. Now, it could also be storms and blah 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 and different all these other factors that we don't have time for. But anyway, that's a big sector. Another big sector is XLF, right? And so this is interesting because we had a couple of massive put purchases in XLF. So I could, if someone is bullish after this pullback on the financials, then I can't really fault them for going in there, buying now that we've dipped. So buying the dip and buying puts, right? Buying the synthetic call. You really can't fault them for that because of this world, right? This country, this world right now. There's a lot of what ifs and things that could break and ignite other things and so on and so forth. So, yeah, I don't think it's a stupid thing to buy puts in stock if you want to be a long here. I would really be a hedge trader under these conditions. I think I've made that clear. I don't wouldn't go super aggressive about anything until we start seeing the cloudiness sort of dissipate and we get clearer views on what we think is going to happen. We thought at the end of last year, coming into this year, things looked really good. And the one thing I maybe neglected in that video to say was they almost look a little too good. I think I corrected that the following week. But that's the thing. When it looks so great, it doesn't stay that way for a very long time. And that was always one of the eerie sort of feelings about it. Well, it looks really good, but man, I'm worried about being in the consensus right now. And I think that our concerns have really been well founded. I mean, and kind of like borne out by time because it hasn't been runaway. I was thinking there could be runaway stuff happening early on into the EPS that we just sort of hit in a big way, but it didn't materialize. I think a lot of this other world and domestic stuff, right? International and domestic stuff has put a damper on people's enthusiasm. And that's just part of the whole game. We can't always get the runaway bull that we like. But XLF, right? If that you could say, well, how do you know that they're hedging in XLF? And that would be a great question. I don't for sure. So if they are hedging, right now the XLF is a little mixed on the charts for me. All you need to really do is have one or two bad sessions, and this thing could be uh, right at that 200 in purple down there. And that's not a look you want, right? It's not really a look you want. That wait, if things are going great, why are my financials, selling off and under technical stress? Another thing that we like to look at are transports, and transports look concerning. They did really finally start putting it together, but again, sort of a false breakout attempt, failed breakout attempt, reversing, respected the 20 there in blue as they got to it, but after now that we're threatening to break that for real and go maybe down to the 50. So that's where this whole breakout started, right near that, where the 50 is now. So that wouldn't be a crazy place to come into. We're not talking about this for trading. We certainly don't trade the XTN very often. It's not like that's the vehicle we go into. We prefer to trade the individual names in these things, but when the UOA shows up, the UOA shows up, and we can only trade right on a UOA based service can only trade on UOA that appears. I can't start inventing phantom UOA just so I can put a short trade on here or there or a long trade on here or there. So it's really funky that way, where some of our leading sectors we like to see are doing great and some aren't. Now, as we said, XLC is worth looking at in a big picture way. This one's got it happening again. We've been waiting for that. It started reasserting itself after really feigning or dropping pretty significantly, actually. It started to rally a few weeks ago and it's continued, and now it's made a new high. Now, this is on this, I believe this has Google and Meta in it. But Google holding up and Meta screaming back up, right? That's probably a big part of maybe helping this. I think if memory serves. So that is also interesting. But as for the rest, I'm going to bring these over, and you can see that there's discord here, right? There's you've got real estate, which tends to be defensive, and XLV kind of hanging in there to starting to attempt to lift. You've got technology, really everybody's darling most of the time, really finishing this week poorly, and actually versus last Friday, you're down on the week. Um, so we've covered a lot of the rest of these already. Here's your staples screaming up here today, right? They screamed up. Here's your discretionary not faring well this week. As we already talked about, transports look vulnerable right now, like where they could roll down even further. Materials, which were working great, they're taking a breather, and they might have had a little, what some people call it, little tweezers, double top up there. So, not the best look. Don't want to panic yet, but if you're a trend line person like I am, and you just happen to drop one on there, it's going to show that you are breaking this most aggressively sloped trend right now. So you're under pressure or threat to do that. XLI couldn't get out of its own way and really do much this week. And then XLU, utilities, right? Similar fate, up a little bit, but not really telling much of a story. So when you look at the whole, I guess, call it the mosaic, not really, I would say, not really a great look. The sectors do not look spectacular. They do look, some of them look a little more vulnerable than they have. So the jury's out. I don't think it's a strong lean to the downside, but I would put them as a small negative. And you could see that we've kind of uh, bumped up against great stuff and sort of backed off a little bit in most of our market breadth measures that we keep on this particular view. So even new highs really kind of fell off today after a really a new high, new low. The ratio of one to the other fell off big. So, and you're getting some new lows. So that is overall a little bit of a negative a negative view there when we take a look at that. I can't really say it's terrible, it's just not great. As far as SLV goes, let's take a look at this because this is historic, right? This is utterly historic. They really shanghaied me yesterday. I tried to close out some stuff, and I was going to roll to out of the monies, and they couldn't. I couldn't get that done in CDE. It really was it was they just wouldn't trade with me. I was trying to give market makers slightly advantageous prices for them to transact, and they just wouldn't come close to working with me. I couldn't get anything done. And then I just got busy, and that's my fate a lot of the times. When I can't get a fill that I think I should have had to work. You get on to things when EOA starts appearing and start analyzing that, or if I'm getting alerts tripping off on EOA that we had previously. But that's what happens, and unfortunately for me, this was a painful one. So I'm still in some calls that I wanted to move into much nearer term. Nothing I could do about it. Just the way it worked out. I could have probably forced a sale, but I thought I might have a little bit of a shot if I sat there for a little while and the thing bounced around, but I didn't get that. Then they took things down on me, and I just got busy. But that did push through our 106.93 number. So there you go. From way back years ago, I think we had something like this in mind. I can't remember exactly when we added this extension projection, and it got there. And it just goes to show you that the stuff, why it works, I do not know. But you can see just how stretched the Bollinger Bands are on that. So from the long-term trend, so I wouldn't be surprised to see that struggle for a while longer, and then we'll have to see if there's another wave that starts coming together or not. GLD pretty similar, but this is the reason why to answer the questions I got. I guess people got frustrated just before the top. I just tried to steer clear of things that were really at that point. I felt super stretched, just technically speaking, and tried to pick other things that had still had some potential to pop, like an SSRM. We went into that one recently and for trading, and that one had wasn't nearly as bad. It did have a breakout, so you did have a chance to make a little money in there. But I didn't want to get people annihilated. I just felt like I've seen these parabolic moves many times in my career, and I just think you if you're not really all over those, where you are there for that moment when that whole dynamic shifts like that, and you're like, holy butter crud, this thing really shifted. I got to do something. This is starting to worry me. If you're not there and you don't react, it can be really hard. And it's not something I want to put people in if I can avoid it and pick other names, which we did. And again, I think you had a chance to trade those. So I don't think there was, a big, you didn't miss out on anything that was easy, is my way of looking at it. And so, especially for UA Essential, which is about learning to trade the style, I don't want to put, something that's got a 95% RSI reading in for people that are not used to handling extreme volatility. It's not an easy thing even for professional traders to do. So on that note, so yeah, so getting back into it, um, you would think, well, okay, there's discord out there. What's going on here? The VIX doesn't care. The VIX is still just, up a little bit here on the week, up, I guess, on the day. But the VIX at this point just doesn't care. I mean, that is not a reading of high concern. So to me, I still feel like they're taking a little too much for granted. People are not paying attention to some of the risk out there. And I guess it might take a trend break if we are to get one to get people to start taking the risk side a little more seriously. But with everything that's happening with with the crazy moves in the metals, with the DXY volatility of the dollar volatility, big plunge, they're trying to bounce that back. With the risk that we've got over there in with the Japan, with Japan with the carry trade, USD dummy, USD/JPY. Get that up there. There you go. There's supposedly the Fed is, supposedly the Fed is supporting the yen is the big talk. But yeah, that's that. We could do take a look at the 10 year, and uh that continues to try to hang in there. What am I doing wrong? Oh, I know what it is. You have to put the colon. My bad. That's hanging in there. It's not backing off much yet. Not backing off much yet. It's not really, it doesn't have that intermediate sort of downtrend that it did. It's got that sort of consolidation to the upside look. Let's hope this doesn't turn into a confirmed trend change, where yields are going back up, up and away. That's only going to make that Atlanta Fed GDP of 5% for the second quarter in a row hard, or somewhere near there, very hard to sustain, I think, with rates like that. So I think there's something too about the whole Microsoft where, this was a lot of these assumptions about how awesome everything's going to be were built into Microsoft stock not all that long ago. This doesn't have anything to do with the today's Bill Gates news, which I don't think anyone's surprised to hear. But remember, not too long ago we were at 550, and we're now over 20% lower from there. And this gap here, right? If you get a risk off market, especially, that gap really looks fillable to me. Now that we're on the return journey potentially to there, and you're below the 200, you're below everything. Your 50s below your 200, in gold below purple, in other words. And these are all in decline mode with a downslope, right? And there's other gaps this thing left as well. And the story, right? The story seems to be changing there. So I don't know. I am not a Microsoft analyst. I don't have time to keep up with nearly as much as I'd like to, let alone the specifics of individual names. So it's very hard for me to keep on top of this. I don't have the time to do the reading that Ryan does, which he does a great job on because he's got to do the webinars, and I do a lot of chart work and try to look at other things so we can get prepared for other services and things like that, to lay the groundwork. But yeah, so this is, to me, this is concerning. The charts do not look good here. One stock, doesn't always a market make. Sometimes maybe it does, but right now I wouldn't say that Microsoft's going to be the loose thread that unwinds the whole market ball of twine here. But I would say that if the story that has changed here starts changing in other places, that could be a big problem. If you get my drift in terms of, like, everyone had all this stuff working out great, and now they're thinking maybe it's not going to work out exactly as they priced all these stocks. And so that's a problem. That's a really potentially big problem. We'll see if that sort of spreads or not. But I think on that note, I'm probably going to wrap up, and I'm just going to finish with, I think you're right back to where you were last week. I hate to say that in terms because I know people like to have that lean that they can trade, but I'm going to say it's great that you're holding trend. Great that you held above your short-term SMAs and the 690 level here. And you have had a few days of selling, so maybe we do come in fresh. Maybe there's a relief rally if this weekend is relatively uneventful. So that would be the cup half full, and all we would do is we would trade it against 690 for your first stop level, or 689.70 if you prefer. And then Friday's low would be your real sort of secondary stop if you want to have one. But yeah, I think if this starts working its way back up into here, I don't see any reason why you wouldn't want to keep going with it. News neutral assumption. So that's possible. But if they were just able to pull off the support of 690 here on expiration day, and you have news that starts breaking things lower, I wouldn't be surprised to walk into that either. I'm not predicting either one. I don't have a lean on either one. What I'm saying is I wouldn't be shocked by any of that because of the potential news that's out there and when any of this stuff could break. You've got the election stuff going on. You've got arrests of celebrities. You've got these big protests supposedly going to expand dramatically this weekend. You've got Iran, other things like that. You've got Cuba supposedly coming up soon too. You've got all these things now. Maybe they're just a Venezuela, over and done thing. I have no idea, but maybe they're not, and that's the thing, or who knows what the initial reaction will be. But the other major indices have have looked a little bit worse for the wear, I think, than the Dow. I'm sorry, than the spiders, and they're all holding trend, as we said earlier. There's nothing horrendous here, but you have to admit that they do look a little bit vulnerable with just a little bit more selling. If you get a little bit more selling, you could start tipping things a little bit more and lose the 50 SMA, or threaten to lose that support, which then sort of leads you to other flat lines, fibs, retracements, and other SMAs that are tiered below there. And that's the thing. You got to admit that. But at the same time, because sellers have largely been in control of IWM, they have largely been in control for 3 days of the Qs, and largely been in control really by pushing this down, the diamonds down. There's also rest factor where that stuff is all primed if it wants to lift off without getting overbought anytime soon. And that's what you want, is that you want these sort of, you want to pull back, and then you want to be able to then get right back towards your high quickly. Now that's going to happen a little bit more quickly maybe in spiders than the others, because you're not far away there. You're not nearly as far away there, so you have less work to do. But the quicker you can get there before getting really overbought without ticking off too many days, the more strength you potentially store, is the way I look at it. And so again, I think you're just, hate to say it, you're just betwixt and between, with worse breath, a little bit worse breath, I would say, with nothing crazy. Sector's a little worse, nothing crazy. Bitcoin and crypto in a kind of scary place. Incredible volatility, literally historic volatility in precious metals, and dollar and rates doing some wacky, sketchy things, in foreign exchange the same. So everything but the VIX seems to be doing something interesting right now, which in itself is interesting. So on that note, I'm just going to wrap it up. I don't want to belabor it. Just wanted to share those thoughts that I could. Um, Catherine O'Hara, RIP. I remember watching her when I was a kid in, I think, the late 70s, early 80s. SCTV was probably my favorite show in those days. I was not a Saturday Night Live person. I was more of an SCTV person. Always have been that way, actually. So yeah, she was really funny way back when, and she stayed funny from what I can tell. Really a funny actress. So prayers for her and her family. On that note, we will wrap it up. I'm going to thank everyone for tuning in, and I'm going to wish everyone a wonderful, healthy, happy weekend. I hope everything stays calm out there. I do hope you got something out of this video that can help you out this upcoming week or some week in the future. So until next time, everyone take care.